Hi, welcome to this video today. Out on the 14th of November, we're on Saturday. Today, we are going to look at the advantages of trading major currencies via exotic currencies. Now, in terms of most traders, they do not look at the exotics. It's a huge mistake in our view because exotic currencies tend to have bigger volatility than the majors. They're normally linked to emerging markets. They're much more sensitive, for example, to risk on and risk off. In this video, I want to look at two pairs. I'll look at the USD against the MXN, Mexican peso, and Turkish lira. Now, they're not as heavily traded, obviously, as the majors. So you're going to pay a little bit more on the pip spread, but that is more than compensated for by the volatility and big moves the exotics can make. The key is to trade small size and look longer term. You don't be trading too short term in the exotics, but if you have small size, you look for the bigger moves. Trading exotics will really enhance your profit potential. I really like the look of the two setups I'm going to do today. I think both pairs have the potential to make 10% in profits plus if our logic and analysis is correct. So what we're going to do is we're going to go and take a look at the pairs right now. But just before we do so, please do keep in mind, it is my view as of this specific moment in time. It can obviously change in line with market action and conditions. You can get all our trading techniques, our daily technical sentiment analysis of 14 FX pairs by just simply clicking on the link beneath this video, and you can get live access to our member center. Also, you can join the Facebook group of traders we have and follow our Facebook page as well. Now, in terms of the first trade setup we will look at, it is going to be USD MXN, and I want to start very quickly with the weekly chart first. All right, we're on the USD MXN weekly chart, and I just want to show the weekly chart very quickly before we get to the daily chart, because you can see a big level. It's a big level of support at 20. And you can see in terms of the 20 level, we did get above it back in 2018 briefly. Then we traded below it for a long time. And then back in March, we had COVID. COVID created risk off, which strengthened the USD on the MXN. You get a massive rally. It's 28% from the break of 20 up to this high. And then the rally totally retraced. So we come down 28%. It's like COVID never happened. Now, I think, COVID is going to help to firm the USD. There's other factors that will firm the USD on the MXN, which I'll come to in a moment. But this 20 level, a key level. Okay. Now, in terms of what we're looking for, is we're looking for a move up, obviously, and in terms of from the way we view the trading opportunities, profit potential of plus 10%. In terms of COVID, vaccine. A lot of people got excited about the vaccine news this week, but we're a long way from getting that deployed in big enough numbers to control COVID. And in the meantime, COVID cases are spiking, particularly in the northern hemisphere as the cold weather kicks in. So I think, COVID will help keep the USD firm. There's other factors as well in terms of why I'm bullish the USD. So let's go and take a look at those factors and also draw our levels of entry, stop, right? USD MXN, we're on the daily chart. We already know the big support level. You can see the poke at it here on Monday and the rebound, and now we're coming back down a bit. Now, in terms of the technicals, way we're going to play it, I'll go through that in a moment. But market is pretty bullish of the peso, or very bullish. Why is the market bullish? Well, the central bank left interest rates unchanged at 4.25% on Thursday. There were expectations for a cut of 0.25 basis points. Okay, so it's a healthy interest rate over the USD. Okay, but I think that's getting pretty priced in now. Thursday, obviously, the meeting happened. The dollar was still firm. Then we've seen a little bit of selling on Friday. Peso's been pushing the dollar down for a while. And a bullish factor is seen as Joe Biden election win. That's bullish for economic ties with the US in the market's eyes. They see Biden as more user friendly to Mexico than Trump. But we knew Biden was going to win last week, and I think that's pretty priced in. Stock markets finished firm on Friday, new multi-year high close. Peso likes risk on, okay? But the move on Friday wasn't that big in the pair. Market generally looking for a V-shaped global economic recovery next year. So the global economy will return to pre-pandemic levels. I personally do not think there's any chance of that happening whatsoever. Of course it could, but even if I'm wrong, that has been the view for a little while, and it's getting priced in. Bearish peso fundamentals. The reality is the economy remains weak, and the major attraction of the peso is just that interest rate. And talking about COVID, the COVID impact in Mexico is pretty big. 90k official deaths reported, okay? But the authorities are now admitting their figures are probably wrong, and it's probably about 150k. So you've got Mexico as one of the most affected countries in terms of the virus. Now, in terms of global COVID cases, they're kind of back on the rise. I mentioned when I was doing the weekly chart. And that will threaten economic growth with lockdowns. America's considering a lockdown if Biden gets in, which looks highly likely despite Trump protesting. Europe, they might have to extend. It's bad news. And that can impact on investor confidence. In terms of the dollar, the pessimism about the dollar. I was looking on Sentiment Trader. They've got an indicator. It's at 10-year high. But I think, too many speculators short the dollar. And we are going to get caution and risk off, which could ignite a big dollar rally. Now, in terms of the chart, two ways of playing it. Bounce from the 20 level here, tail exhaustion, come up a bit, then coming down on Friday. If we've come through to the downside, I'd key off that 20 level on strength, or if we go through it, I'd come straight back through the 20 level, okay? So it's a buy on weakness in our view. You don't want to buy weakness, you want to get some strength, either off the 20 level, or if it goes through, buy back through the level. But what if we don't take out the 20 level, we start to work our way higher? Well, my own view is there's support here. That's first level, which we're testing on Friday. Okay. And the second level is obviously here, which is the 20 level. So I'm looking for a move up potentially. Where would you buy? Just want to come through there. So basically you're going to come through tail, body, body, okay? And your stop should be behind the 20 level. Where could we go to? My own view is just to correct the dollar's oversold condition, we should get up to here. We might overrun that level. But if we got up there, I'd be very, very happy. So in terms of risk reward, it looks pretty good to us. And of course, if you do come through this level and you start to accelerate up, this tends to be a fast moving pair. You can tuck your stop in behind the first level. You don't need to leave it behind the second level. Obviously, you manage the trade as it goes. Next week should be an interesting one in this pair. So we'll see what happens. But I like the look of long USD against MXN. Risk against ROD looks really good. And we shall see. Now I want to move on to another fast-moving pair, and this one's been moving even faster than the Mexican peso. It's the US dollar against the Turkish lira. USD try daily chart, and what you can see is here back in August, where my cursor is, tight sideways volatility, then a big uptrend that is basically supported by this 20-day moving average, the green line. So break up initially, come back to the 20, back to it, briefly through it, then up and away, and then you get the retracement. Okay, so from August to November, this big move up, 25% retracement last 6 days is 11%. That's a huge move in 6 days. So you got a bigger move in 6 days than, let's say, in Euro USD in many, many months, haven't you? So yeah, these pairs are fast moving. And why did we have the big rise and why the retracement? Okay, just in this pair, the fundamentals and sentiment you need to look at. Okay, I'll draw my technical levels in a moment. But one of the main reasons for the lira fall or the USD rise was interest rates were below inflation. Inflation in Turkey at 12%, interest rates at 10.5%. Ideally, if you want to contain inflation, you put the interest rate above inflation. The Central Bank of Turkey didn't do that. The USD went up. Okay. Now, why has the lira rallied and pushed the USD down? Well, it's based on the markets looking for now a 5% interest rate rise. Now, the central bank meet this Thursday. Okay, that's a big rise, isn't it? So why is the market looking for that big rise? Because the new central bank governor has come in and he said he's going to stabilize things and whatever in terms of interest rate policy to help the Turkish economy. But I don't see him going for a 5% rise. Why? President Erdogan appointed him. And President Erdogan has said again this week, he's always saying it, that interest rates are the cause of inflation. There's no logic in that at all. He's kind of eccentric. Obviously, they're not. And he's then said Turkey would reduce inflation. He's actually called interest rate hikes the mother of all evils in the past. Now, he's appointed the guy at the central bank. Is he going to allow a 5% interest rate hike? I just don't think so. I think now, after that big fall, 5%, the market is looking for it, it's discounted. I think also the dollar fell because the market's just bullish on the new economic strategy in Turkey. Again, it was revealed by President Erdogan. You can see my quote, lira soars as Erdogan promises a new economic era in Turkey. That comes from Reuters. I read, this new economic era and what they're planning, but I didn't really see too many specifics. It all seemed kind of vague to me. So I think the market's probably a little bit too bullish on the new economic era as well. You've also got foreign policy, still a concern. Okay, it did help the USD rise. Because Turkey, very aggressive foreign policy. Erdogan, standoff with Greece, which we read about in the media, military incursions in Libya and Syria, also incursions recently in Nagorno-Karabakh, getting involved in the dispute between Armenia and Azerbaijan. There's a ceasefire there now, which might have helped this fall because Russia brokered the ceasefire and basically has excluded Turkey, basically, from getting further involved. But those concerns are still there. Erdogan has a very aggressive foreign policy, and there's still the threat of US sanctions, as Turkey, a member of NATO, did actually buy a Russian missile defense system, which has angered the US. I think if Biden is confirmed as president, then you would possibly see sanctions. But for now, it's all about the new economic era and the interest rate hike. Now, in terms of the way we see it, there's a key level of support, and the key level of support is here, 750. Okay. Now, in terms of that's where you kind of, paused a bit, broke up, spike tail, but also on the weekly chart, you can see the 20-week moving average is there. Now, if we're bullish, we'll look to buy back to the 20-week moving average or 20-day. And obviously, we're bullish here. Okay, so I think that level is going to be very hard to take out. If we were to come down to this level, I'd look to key off it on strength. If we were to go through the level, buy back through the level. Okay, so if we penetrate level, buy straight back through it. But at this moment in time, I'm looking at the chart and looking to buy on strength. So where do I want to buy? And in terms of my buy level, the conservative level is here, which is on my trading page if everyone's looking at it. But I'm going to lower it. I'm going to go there. Okay, because I think you are going to see the dollar rise into Thursday. Okay, so basically my level has changed. I'm just going to come straight back through the open of the day. This big red, smaller red, and a smaller red. Okay, so I'm going to go with a very aggressive entry. And where am I looking for? I'm going to go for a move back to chart highs, and there is a level in between, which is there. Okay, but coming into Thursday, I think the dollar will firm up. Okay, the move is overdone on the downside, and I'm actually looking for risk off as well. So that indicates, not sort of indicates, that points to just a generally stronger dollar. Okay, and it will hurt the try. So we shall see. What I'll do, Thursday will be the key day, so I will post something on my Facebook page. But two fast moving pairs. Okay, exotics are really good in my view to trade. You do get action, which is what we want as Forex traders, and they're more volatile. You just do smaller positions. Okay, so we will see how these two trades turn out. But that is the video for today. Thanks for watching. Take care. Have a good day.